You're listening to Smart Metals Radio from the Hard Assets Alliance.
Hello and welcome to the show with me, Andy Duncan, in London. Today my special guest is Jayant Bhandari, formerly of US Global Investors and now an institutional investment advisor. And today he's coming to us from Vancouver. On the show we'll be discussing the junior gold mining sector, the year ahead for gold, and the strategic investment differences between India and China. Hello, Jayant.
Nice to be with you, Andy.
Now, in our Smart Metals interview last week with Doug Casey, he said he thought junior gold miners were at incredibly low prices. Do you agree with this assessment? And if you do you think we've hit some kind of a bottom?
I don't necessarily think that junior mining offers a huge amount of value right now. And the reason is that metal prices are very low at the moment, particularly gold and silver prices are very low, which means that a lot of mining companies just don't make any sense. If mining companies don't make any sense, and if they don't start making a profit in the near term, a lot of mines will start closing. As a result, their need to buy development properties from junior mining will fall very significantly. Now, having said that, the good thing about junior mining companies is that they can sit on those properties without having to spend much money if they don't have to. Whereas mining companies have to keep spending money on the properties to keep producing ounces. As a result, in my view, junior mining companies offer much more value than mining companies do, but one has to be very selective about choosing companies that have the patience to sit on projects that they have without spending money if they don't have to spend money. And if then you can find companies that actually offer you value at the current metal prices, then you might have a huge upside in owning those companies.
And could you describe for us how you choose those junior gold mining companies which can sit on these their own resources?
So for me, it's very important to look for companies that can make a profit at current metal prices or lower metal prices. Companies that offer me after using those kind of metal prices at least a 15, 20 or 25% upside every year, which means that I discount valuations, discount cash flow of these projects by about 20% before I start to take any interest in those companies.
Now, the gold price itself, it's been kind of grumbling along now around $1,250, up and down around there. Do you think that 2014 is going to see it start lifting up again like it did in the year 2000 and go towards this 2000 kind of magical barrier? Or is it going to grumble along still at this 1250 level?
I think one big risk right now with gold is that Indian economy is stagnating. So Indian consumption for gold is stagnating. Having said that, the world over, governments are destroying their fiat currency. And at some point of time, people will and should start waking up to the fact that they are destroying the currency, they are destroying the purchasing power of people, and people have to start hedging their money more than that they have so far.
Now, one of the strange things that's been happening in recent times is the Indian government has been imposing taxes, import taxes and so on gold. Now, I was talking to Michael Krieger a few weeks ago, and we discussed that they could be going one of two ways. They could increase these kind of restrictive taxes, and they could even start trying to confiscate private gold, or they could go completely the other way and start freeing up the gold market again and taking off the taxes. What do you think the Indian government's going to do over the next year or two with gold?
Okay, firstly, their restrictions on gold has had no effect on the Indian gold market. Gold has started coming into India through smugglers, and smugglers are making an enormous amount of profit from doing this. So the reason why Indian government has imposed the restrictions is to be able to get more bribes from smugglers. So firstly, I don't see imports of gold falling as a result of any restrictive policies. Secondly, bureaucrats like to own gold as well, and they don't want to confiscate their own gold. So I don't see that the reason why they are imposing restriction on gold has anything to do with reducing demand of gold in India. And they can't succeed in it because it's an extraordinarily corrupt country. They can't stop things like those.
Yeah, I don't think they'd be able to find it, would they? I mean, the 25,000 tons that's allegedly there. Now, the other major Asian gold player is, of course, China. Now, in China, instead of trying to stop people having gold, they're actually encouraging people to purchase their own private supply of gold. And the Chinese central bank is also salting away huge amounts of gold, both from Chinese production and through Hong Kong and Shanghai. Do you think this Chinese appetite for gold will continue, or do you think it will subside at some point?
Andy, I spend a lot of time in China and Hong Kong, and I see the jewelry stores and gold store packed with people. I think Chinese are increasingly interested in gold, and increasingly they are picking up the slack that has been created by India. They want to own gold. And that is despite the fact that Chinese renminbi has done very well over the last few years. They still want to own gold because they are afraid of what governments can do. And they have, in the recent past, experienced the idiocies of having bad governments and big governments. So they want to protect their wealth by investing in gold.
Now, the traditional money in China was always a silver coin, the kind of old yuan, which is the round silver coin. Do you believe, though, however, that despite all the money printing they might be doing with the renminbi, that they might actually be trying to move towards a gold renminbi in the future?
I think it's very hard to predict what will be the future currency because the world is very hard to predict. I mean, if you look at what has happened over the last 1 year, Bitcoin has come into the scene. I don't like Bitcoin as such, but Bitcoin has suddenly emerged in the last 6 months or 1 year. So I don't think I can really predict what will happen in the future. I think more in terms of hedging myself against inflation and protecting my wealth. And that's where I see gold's importance. And that's where I see Chinese see importance of gold. And that's where Indians see importance of gold.
Now, the two together, India and China, get lumped often as just the Asian gold market, but you see them as completely different players. Can you just summarize for us how you see them as these different these different entities?
What happens with Western people is that they believe in a religion called democracy, and they like to see any country that has a democratic system to be better than other countries. And as a result, Western people over the last 20 years have started to like India. The reality is that India is an extremely corrupt and chaotic place relative to China. As I said, I spend a lot of time in China, and I find China to be almost a first world country once I have been to India. Now, GDP per capita of China is about 4 times that of India. The growth rate of China is twice as much as that of India. Now, maybe some of the figures in China are exaggerated, but maybe Indian figures are exaggerated as well. But my eyes tell me that China is just so much better than India is. So much better that even in my city of Bhopal, which is a small city in central India, the market is flooded with Chinese goods. People like Chinese goods because they are cheap and good compared to what Indian manufacturers manufacture.
So if you were going to invest, you'd invest in China rather than India?
Well, a lot of Indian companies prefer to invest in China than they would invest in India. If India did not have capital restrictions, a lot of Indian money would actually leave.
Okay, now that brings us on to my regular $1 million question on this show. I'm going to hand you right now, personally, $1 million US, and you have to invest it all right now. What percentage would you buy physical gold with, physical silver with? What percentage would you spend on mining stocks, junior or major? And what else would you invest in?
Well, I am personally about 75% invested in junior mining stock. I prefer something like 10 to 20% of my money going into gold and silver. And I for international diversification purposes, I like to keep rest of my money in other countries.
So if the gold price does go up, then you're going to be nicely leveraged. Now, a lot of people have a fair value in their minds for gold. Some people say it's whatever the market says it is today because the market is divine. And some people say, no, it should be $20,000 or it should be $10,000 or whatever. Do you have in your mind a fair value for gold that it should, say, reach within 5 or 10 years?
I don't think I believe in those people who say gold is worth $10,000 or $20,000 per ounce. And the reason is that if gold hypothetically went up to that kind of range, hundreds of gold projects will come into production and they will reduce the price of gold. And I'm talking in terms of real value of dollar. So I don't think gold can go to that kind of level unless there is hyperinflation in the Western world. Now, what is the minimum price that gold should fall to? I don't know. But I think once people start getting emotionally interested in hedging their themselves against inflation, gold price should start to do well. And I'm not in a position to predict the price of gold.
Okay, so you're more in the kind of market is divine camp slightly. Now, it's been great talking to you today, Jayant. Can you tell our listeners where they can find out more about you?
Well, I have a website which is jayantbhandari.com, and I'll spell it for you, JayantBhandari.com. Okay,
thank you very much for your time today, Jayant Bhandari.
Thank you very much for having me, Andy.
Subscribe to the Smart Metals Radio Show on iTunes. You can also visit us online at hardassets.com/radio, where you can subscribe to our free mailing list and receive our free Smart Metals newsletter. For anyone who wants to set up an account with the Hard Assets Alliance, as a special offer, we shall be waiving opening and setting up fees. Listeners who'd like to speak to a live rep to walk through the registration process can call 1-877-727-7387. That's 1-877-727-7387. I'd like to thank Jayant Bhandari for joining us on today's programme, and I'd like to thank you very much for listening. Until next time, and from a cold and wet London, goodbye.